GDP numbers are out.
GDP numbers out. We have the agri data, which is in fact better than expectations, and the GDP data has come in at 7.4%. This is versus our poll of 7.5%. I had the agri numbers which just flashed by, and that has been much better than expectations of around 2.2%. We were working with around 1.1%. So what we have in terms of data right now is, yes, the headline GDP has come in just a tad below expectations, but it is a growth on a year-on-year basis, on a Q-on-Q basis, which has come in 7.4 compares to 7%, and agri at 2.2%, which compares to 1.9%. Latha joins in from the Investor Summit as well. Latha, over to you. Better than largely in line, you'd have to say.
Yeah, actually, I would say largely in line with expectations. It's a 2.2% agricultural growth, a 3.2% growth in mining and quarrying. Manufacturing is up 9.3%. That's actually the best number we've got. Electricity is up 6.7%. Not bad. Construction is quite bad. It's up just 2.6%. Trade hotels is up 10.6%. Financial sector, that is finance, insurance, real estate and professional services, is up 9.7%. And public administration is not bad actually, up 4.7%. Well, it's poor if you compare it to year-ago levels, but in the first quarter we did only 2.7. Compared to that, public administration is 4.7, which means actually the government has been spending. That is a positive. But construction has done very badly, which means not much on construction activities. Let me get to the current prices. I'm reading out the current prices only to indicate that in nominal terms, actually in terms of corporate earnings, the growth has not been much. In nominal terms, the GDP growth is 5.2%. So it's only because there is a deflation, because prices have fallen, the deflator is so high that you're seeing a real growth. But if you looked at it in nominal terms, there has actually been a growth of only 5.2%, and there mining and quarrying is the one that is worst. And that is understandable because that is where prices have fallen the most. So there it is a -1.5%, a contraction in mining as well as in construction, where there is a -2%. Trade hotels is up 5.7%. Electricity is the only one that's done well. That's up 12.9%. So there clearly the nominal growth is even better than the real growth. In several others, the nominal growth is lower than the real growth, indicating that prices have fallen in everything else, except in the case of electricity, where we know that in several places electricity prices have been increased, utility prices have been increased. So barring electricity, which has risen by about 13% in nominal terms, in everything else, the prices, the real growth is, the nominal growth is lower, real growth is higher. As well in public administration, public health, education, the nominal growth is 7.8%, but the real growth is only 4.7%. We have our experts with us. I think, Ekta, you want to go to them?
Yes, in fact, we have Soumya Ghosh joining in, who is the economic advisor of SBI. Soumya, over to you. Your sense in terms of the Q2FY16 GDP?
I think it's largely in line with the expectations, but the agricultural growth rate actually is a positive surprise. In fact, the growth rate in agricultural production, I think, reflects the trend that there was in fact a 3.1% increase in the Kharif food grain output and also in oilseeds. So perhaps, contrary to market expectations, the agricultural sector has done much better. And the other important thing, as you just pointed out, the construction sector activity was supposed to be weak because cement and iron and steel has been doing badly, and we are not expecting any pickup in the construction sector. Regarding the service sector, within the trade, hotels, transport and communication, I can see that there has been a slowdown as anticipated, because most of the indicators were reflecting that some sort of a demand slowdown. And the finance segment has largely held to the same growth, I think around 9.7% as against 9.6% last time. So overall, it's a number which is largely in line with the market expectations, with a positive surprise on the agricultural sector, and the industry sector has also done well because of the improvement in the value added. As all of us know that the commodity prices has been declining at a rapid pace.
Okay, I just want to tell you that we've got the other numbers, the expenditure numbers as well. And there the government final capital expenditure has gone up by 3.2% to 3.56 lakh crores. If you give me a minute, I'll also give you the private consumption. That's gone up, 1 minute, by 6.7%. So private final consumption expenditure has risen by 6.7%. Government final consumption expenditure has gone up by 3.2%. And in a minute, I will give you the gross fixed capital formation as well. That's gone up fairly substantially. I think it's gone up by almost 15%. I'll get to you in a minute on that. I think the gross fixed capital expenditure has gone up by 7.6%. That's the one that looks very good. Dr. Pronab Sen, I want to toss all these to you. First up, it's not a very good growth that we have seen in construction. I mean, if genuinely there was very good growth in government expenditure on roads, we should have seen construction do well. But both in nominal terms and in real terms, construction actually in nominal terms is -2%. In real terms, it is +2%. Are you convinced that there is enough amount of governmental activity going on? What is your overall comment on the numbers you have heard? Basic GDA at basic prices 7.4%, agriculture 2.2%, manufacturing 9.3%, electricity 6.7%, construction 2.6%, trade hotels 10.6%, finance 9.7%, public administration 4.7%. All those are in real terms. Dr. Sen?
Well, what can you say? The really sort of, what should I say, heartening thing about these numbers is what's happened in manufacturing. What the numbers suggest is that the steady improvement that we've seen in the value added relative to the value of output ratio is continuing. And there's a limit to how far it can go, but the fact that it has continued over a period of nearly 4 years is a very, very good thing, which basically means that Indian manufacturing has become much, much more efficient than it used to be earlier. And hopefully this will continue into the future, not the improvement necessarily, but this higher level of efficiency. The agriculture is a little bit of a surprise. Sorry, go ahead.
I just wanted to get a technical point out of the way. The nominal growth is only 5.2% in terms of output, but in real terms it is 7.4%. Now the wedge is widening. Isn't this a huge deflator effect? We don't feel like it is a 7% growth because in nominal terms it is only a 5% growth. But really speaking, we are growing at 7.4% because you are able to buy more with the same rupee. What's your comment on this? That nominal growth is so much lower than real growth.
Basically what the numbers are suggesting is that output prices have fallen less than the input prices. And that is to be expected. I mean, we all know that global commodity prices are very weak. And in India, the WPI numbers, after correcting for the commodity prices, have shown a mild positive. So this is pretty much known and this is expected. The point of all of this is that, as you said, that as far as you and I are concerned, which is the consuming public, perhaps as far as the entrepreneurs themselves are concerned, this is not a bad thing at all, which is a high real growth rate and a relatively low nominal growth rate. However, it isn't particularly good for the markets because markets generally tend to work on the nominals. Nor is it very good for the government
on the nominal
budget,
EPS.
because there again the nominal the nominal matters a lot. So both for the stock market as well as for government, this is probably bad news, but for the rest of us, I think the news is very good.
Okay. Well, actually, let me develop on that point. At 5.2% nominal growth for this quarter, plus a 7.1 in the first quarter, we are actually running nominal GDP growth at something like 6% or maybe at best 6.2%. Now, if that is the growth, we will have a problem with tax collections, even deficit, you think?
Well, as far as tax collections are concerned, maybe not so much, because on the petroleum front, we've got a windfall on taxes. So we should be okay pretty much on taxes. But on the overall fiscal numbers, remember a lot of the government budget really is on wages and salaries. And that's where the hit is going to come. It may not come within this year, depending upon when the government chooses to implement the pay commission recommendations. But that's where you, I think, looking at a bit of a problem.
Okay. Well, I interrupted you when you were giving me the overall comment on the growth numbers itself. You said agriculture is a positive surprise at 2.2%. Manufacturing is a sterling performance at 9.3%. Your comments on the rest before I go to the other guests?
Well, the real disappointment is construction, but it's not something really unexpected, because I think these numbers don't quite reflect what the government has been trying to do on the infrastructure front. We all know that as far as the real estate housing construction is concerned, it's not been doing anything for the last several years. But public investment in roads...
Means the government is not spending enough, isn't it?
Well, it's not a question of whether the government is spending or not. At the end of the day, remember on these things, particularly when you're talking about large projects, there is a big difference between the point at which an investment project is approved and it hits the ground, which is when it shows up in these numbers.
Okay.
And
fair point.
so you really do need to look at other indicators to get a feel for what is coming up later. My sense is that you're going to see this sector uptick very rapidly. But unfortunately, until and unless housing construction goes up, you're not going to see the glory years of 8-9% growth in construction.
Okay. Well, going from the expenditure side, analysts keep telling us that that's not the very reliable way to do it, but private final consumption expenditure in real terms has gone up by 6.7%, which is good. Gross government final consumption expenditure has gone up by only 3.2%. Again, if you looked at construction and at government final consumption, you get a sense that this big government expenditure we've been waiting for hasn't hit the ground. It appears to be only announcement at this point in time. Gross fixed capital formation, however, is up 7.6%. It's a total of 8.3 lakh crore rupees in real terms. So that seems like a very good number. And the disaster, another bad number, is exports. Exports have contracted by 4.8%. This is from the expenditure side. Well, I want inputs on all this from Soumya, but before that, let me just turn quickly to Ananth Narayan, the managing director from Standard Chartered Bank, who's joining us. Ananth, will markets react to this at all? Nominal terms, 5.2%, but in real terms, which is what everyone looks at, a 7.4% growth. Anything in this entire set, Dr. Sen pointed out to the extraordinary performance of manufacturing and a better than expected performance of agriculture. Anything at all the markets or investors investing in India will react to?
Not really, Latha. I think the folks in the market, like myself, are fairly simple people. The good news as far as we are concerned is the headline number is not a shocker. 7.4% is pretty much what we expected. We still haven't learned to reconcile. We are getting more familiar with the GVA numbers as they come out, but we frankly haven't been able to reconcile them yet with what's happening on the ground, particularly with the relatively dismal numbers that keep coming up every quarter on the results. So, we leave that reconciliation aside for the time being. We will continue to focus on other things, including the big credit policy decision tomorrow and the language that the governor uses in that policy, followed, of course, by what happens on the Fed and what happens with China, SDR, and so on and so forth. As far as the market is concerned, I think it's good academic interest as far as this print is concerned. I don't think we react to it as such.
Okay. very politely put, Ananth, but I'll try to reconcile it just a bit by telling you that in nominal terms we have grown only 5 rupees. But in real terms, that 5 rupees is going to buy you 7.4 rupees worth of stuff, which is why the real growth is 7.4%. But in nominal terms, we have grown only 5.2%, if that is of any consolation. Anyways, thank you very much, Ananth, Narayan, for joining us. That's the big voice from the fixed income side of the markets, a voice that speaks to a lot of foreign investors who believes that this is of academic interest. To be fair, I mean, we've got the core sector numbers just hitting us at 3.2%. That is of a later month. And tomorrow we will get the auto sales numbers of November. So really, September will be passé for the markets to react. But nevertheless, is this a growth story? Soumya, all your comments on from the expenditure side, is the gross fixed capital formation number a very good number? Is the government expenditure number read along with construction or disappointment? All your key takeaways, please.
See, as far as the expenditure numbers are concerned, I think from 8 lakh crores to 8 lakh 30,000 odd crores, I think the gross fixed capital formation, that is an increase, but I don't think that that's too much of an increase to ponder at this point of time. But my sense is that the construction sector activities, as Dr. Sen was pointing out, I think that is more to do with the housing sector activities. And so cement, for example, cement dispatches, iron and steel dispatches in the first half of the current fiscal has been doing quite badly, and that is reflected in the construction sector. And I don't think that this construction sector will log in a good growth rate at least in the next quarter or so, because the numbers on the steel and cement are still not encouraging. But as far as the next 2 quarters are concerned, I think these current quarters, if you look into the GV and the GDP number, they are almost similar. That means the deflator, as we pointed out, is still running at 0 or possibly at GVA deflator at negative levels if we look across the different sectors. So all in all, the number is in line with the expectation. And the last quarter, I think if we go at this rate, the last quarter of the current fiscal could actually throw a positive surprise.
Okay. Your comment on whether the government, where will the growth come from? It looks like it is still private final consumption expenditure led. It doesn't seem to be government led.
I think the private final, I'll reserve my comments on that, because the private final consumption expenditure is still remains so weak. And if I look into the numbers over here, from 15 lakh 92,000 crores, it has actually moved to 15 lakh 40,000 crores or odd. So private final consumption expenditure, I'm not seeing too much of a growth, and that is also, yes. So that's possible. So basically on a sequential basis, there has been some amount of a slowdown. But if you compare, yes. So that
my point is, Soumya, to be fair, you should not compare it with first quarter. It traditionally tends to be a stronger quarter than the second quarter. Seasonally uniform quarters, if you compare year on year, it looks like a 6.7% growth.
No, that is fine. I agree with your point that if you look into year on year, it looks a little bit of on the lower side. But one good thing I would like to point out over the positive part is that in the third quarter, at least in the month of October, we are actually seeing a lot of traction from the increase in the consumer sentiment. For example, the retail credit growth, the credit growth which has been at very high levels. So if that is the case, I think that private final consumption expenditure will park up significantly in the third quarter, and that could act.
So Soumya, so what is your overall your GDP forecast, or rather GVA forecast for Q3, Q4 and full year?
See, for the full year, we are still at relatively higher levels. We are going to look at these numbers today and see whether we need to revise downward the number projections. Possibly we'll be ending up with a number of 7.6% for the entire year. Last quarter GDP, if you look at the Q3, Q4 numbers, I think the Q4 numbers will be much better than the Q3 numbers, and it could be anywhere between 7.7 to 7.9%. The last quarter I am talking about.
Okay. But Q3, the current quarter will be?
The growth rate we could be at around 7.6%. The current quarter could be marginally better than this quarter, possibly at 7.5 or 7.6%. I mean the October to December quarter.
All right. All right, so I got all your numbers. We already know that we have a 7.1 in the first quarter, 7.4 is the second quarter that got announced today. Soumya's expectation is 7.5 to 6 in the current quarter, Q3, and 7.7 to 7.9 in the last quarter, giving an overall average of 7.6. Well, for us, the headline number 7.4 is very much in line with what the street was estimating. Ekta's poll had thrown up an average of 7.5%. So this has come practically in line with estimates. One final comment from Dipan Mehta, the stock market veteran. Dipan, tomorrow when you trade, will you care about this number, or will you rather worry about the auto sales numbers that will come tomorrow?
Yeah, well, that and the RBI policy, I think. What I'm looking forward to the big event, of course, is the Federal Reserve policy middle of December. They're going to raise the US interest rates. I don't think this number matters much at this point of time. It is basically historical and just confirms what we've already seen in the September quarter numbers, that top line is a struggle for a whole host of sectors and companies.
Yes, I take your point. Dipan Mehta, thank you very much for joining us with that quick take. Well, from the GDP numbers, the takeaway is that the real GDP growth of 7.4 is in line with market estimates. Agriculture is slightly better than expected. Manufacturing is absolutely shining with 9.3%. The other numbers more or less are in line with estimates. What is a shocker here is the nominal GDP. At current prices, the growth has been only 5.2%, which explains why everyone says this doesn't feel like a 7.5% growth country, because you have actually grown by only 5 rupees, but you're able to buy 7.5 rupees worth of stuff, is what the numbers are telling us, that inflation well under control, deflation actually, which is why real growth better than nominal growth. That's it from the GDP numbers.